A warm welcome to all of you and thank you for joining us today for this investor interaction session. We truly appreciate your time and interest in our company. The objective of today's meeting is to enhance the visibility of Positron Energy Limited while also providing an open forum to address any queries or thoughts you may have about our business, operations, or future plans. We are pleased to have with us Mr. Manav Behri, Whole-time Director and CEO of Positron Energy Limited. Also, we have with us Mr. Sujit Sugatan, whole-time director and CFO, who will be sharing key insights into the company's current standing and strategic outlook. Joining him is Ms. Madhuri Mistry, our company secretary, who will also help address any regulatory or corporate governance related queries. This session is part of our ongoing efforts to stay transparent, build stronger investor relationships, and keep our stakeholders well informed. With that, I'd like to hand it over to Sujit sir to take us through a brief presentation. Thank you and over to you, sir.
Thank you, Siddhi, for the quick introduction. You can just display the presentation, share it.
Yes, sir. Just a second. Sir, is the screen visible?
Yeah, the screen is visible.
Okay.
Yeah. Good evening to all of you. First of all, a warm welcome to all our investors, esteemed investors who are present to have an update with respect to Positron Energy and understand the business of Positron, what we have been doing till in the last financial year and all. So we will quickly try and understand the business in terms of the business overview, what Positron has been doing, and understand all our business verticals and the kind of the financials, and also we'll quickly run through the presentation. Looking into the company overview, basically Positron Energy specializes in gas sales and aggregation business. That is one of our key offerings. Apart from that, we are there in the entire value chain of city gas distribution business, starting from management and technical advisory services, operation and maintenance related services, EPC related services. Are you able to see the screen? I think there is something amiss.
Yes, we are able to see.
Okay. So that summarizes the entire value chain of city gas distribution business offerings for Positron Energy. We provide end-to-end gas distribution solutions to the various industries. And these solutions we are providing through pipelines where we are, acting as gas aggregator. We are sourcing the gas from various domestic markets as well as international markets and creating a gas portfolio, providing solutions to the end industrial consumers as well as the city gas distribution operators. So that is one of our key aspects that we work on. Apart from that, in the services, we specialize in commercial and financial advisory, project management, operation and maintenance related aspects. With respect to the gas portfolio, till December 2024, we have been undertaking around 15,000 to 16,000 MMBTU of gas per day. So that's the gas portfolio that Positron Energy is having at present. The gas distribution, as I already mentioned, is being facilitated through the common carrier pipeline network, which is spread all across the country, which crisscrosses from north to south and east to west. Currently, we have upwards of 30,000 odd, approximate 30,000 kilometers of transmission pipeline, which helps us to create all the connectivity in terms of reaching to the end consumers. With respect to the demand sourcing and short-term as well as long-term contracts that help us in terms of serving to the needs which are posed in front of us from the industries as well as the city gas distribution operators. So we kind of do our sourcing in terms of prudently balancing the portfolio. Next slide, Siddhi. These are a few of the key highlights. The company is promoted and founded by Mr. Rajiv Menon, Mr. Manav Bahri, and myself, Sujit K. Sugatan. Together, we bring in around 50 years of combined experience across the oil and gas sector. Before entering into Positron Energy, also we have industry-wide experience and handling oil and gas sector. So we bring in a wealth of knowledge in terms of all the aspects or the entire value chain of gas distribution business in the country. So we have been continuously focused in terms of delivering the comprehensive gas distribution solutions for the various organizations who are operating in this particular sector. Looking into the various categories, again, the additional gas volumes that we have been able to secure post the listing that has happened last year in August was in terms of having a contract which was signed with 15,000 to 16,000 MMBtu per day, which helped us to build our financial year FY25. That was the additional portfolio that we had added, and we have been constantly in terms of creating a balance by additionally aggregating 3,000 to 5,000 MMBtu per day in order to have a full portfolio of natural gas available for serving the existing clientele that Positron had, as well as expanding our reach within the market segments. This was all possible with respect to the kind of regulatory boost. Like most of our investors, we are all aware about the changes that have been happening in the city gas distribution business, where the gas allocation policies have been changed, and there has been a lot of implications onto the various CGD companies, which came in as a big opportunity for us, because that helped us further expand our existing market reach by getting the amendments in terms of the gas allocation to the existing CGD operators as well as to industries, because that opens up the market. Because India is heading towards creating a gas-based economy, and with respect to that kind of a regulatory boost and the vision of natural MOPNG, Ministry of Petroleum and Natural Gas, companies like Positron Energy derive their strength out of it, and that opens the more new demand centers for us and helps us to enhance our gas portfolio per se. That has helped us in terms of further very strong revenue growth, as we have already declared in the ninth month closing 31st of December, we had clocked the revenue of 159 crores, which is compared to the last year's entire financial year revenue, we were at 134 crores. So we can easily see that on a strength to strength basis, we have been expanding our gas portfolio and increasing our reach within the target client segments in the country. Next slide. In the core business area already discussed, this is basically gas aggregation business, where we have already spelled out in terms of the molecules that we are sourcing and selling. Apart from that, the technical consulting services is the very core area where we have our presence across the entire industry, spanning the entire nation. We have our teams spread up all across, implementing the gas distribution projects, the pipeline projects, the operations, maintenance, all kind of activities. The deliverables are there, and that gives us the strength in terms of reach across the country, and the presence helps us in getting the best of MIS in terms of business expansion in future times, as per the business plan chartered by the company. The gas distribution journey and the regulatory impact, if we have to understand, the entire sector has been driven by the Petroleum and Natural Gas Regulatory Board, which was set up in 2008, which helped us in terms of expanding the transmission pipeline network across the country, which creates the connectivity in terms of all the states, the various demand centers, the districts. The entire country was supposed to be spread with all the gas pipeline network. Now, the regulatory vision was very clear that the licensing was supposed to be accomplished for all the city gas distribution locations. Like in the beginning, we had concentration towards Gujarat, Maharashtra, in Mumbai and Delhi and all. Now, in the country, we have upwards of 99% of all the land available in the country has been licensed for city gas distribution business. So that means that there has been entities who have been awarded the license under the regulatory regime for expanding the pipeline network. So once the pipeline network is reaching across the country, that helps us in terms of further enhancing the business portfolio. So under the regulatory regime, the entire licensing process has been completed a couple of years back, and it is under a minimum work program. So in the minimum work program, you have to lay the infrastructure, expand the pipeline network across the country. And so what we are witnessing, the growth, the part of which Positron Energy has been able to, be a part of and kind of expand its business portfolio. is directly linked in terms of the expansion of the infrastructure for the gas distribution networks across the country. And that will continue to happen in the due course till 2030. Because government of India has also created a vision of expanding the share of natural gas from the existing 6.5% in the energy mix to 15%. So that is all commensurate with the development of infrastructure in terms of both the CNG stations as well as the pipeline infrastructure. So that's all under the regulatory regime that has happened. With respect to that environment which was created by the regulatory framework, we standardized all the practices, and based on that, we were able to, continuously penetrate into each of the business segments that we are operating, and working alongside the various investors in terms of getting the infrastructure boost, the development in terms of city gas distribution business as well. Alongside the client, we have been doing it through our technical consulting service portfolio as well. Next slide, please. Right. So talking about the future prospects and the growth strategies, this is the area which all the investors would like to understand in terms of how Positron Energy is poised to expand its business portfolio further. Currently, as I've already mentioned, we are doing roughly around 15,000 to 16,000 MMBtu per day. In the next 2 to 3 years of time, we are looking further to expand our portfolio up to 25,000 MMBtu per day, and that will help us to carve out our niche from the existing expansion that is happening and tap the growth that the sector is also forcing in terms of expansion till 2030, as I already mentioned. The expansion of the service offering is also directly linked with all the city gas distribution business related development across each of the segments across the country. So the more and more the gas infrastructure develops, all our business offerings are also accordingly expanding on a year-on-year basis. Looking into the workforce development, currently Positron Energy has a very strong workforce with respect to the number of engineers. We have upward of 150 engineers in our portfolio as of now. And in order to tap the increased demand which is going to come up, we are looking at enhancing our workforce by minimum 25% in the years to come. So that will help us to further expand our offerings both in gas aggregation business as well as in the services business. Next slide. Looking into the revenue distribution and margin, again, the gas aggregation business forms the major business portfolio for us, where the revenue from gas aggregation accounts for 90% as on date, and the technical services happens to be the remaining 10% of our business offerings. And looking into the segment wise kind of breakdown in terms of the margins, the consulting business gives us a higher margin, which varies on assignment to assignment, but it is roughly between 30 to 50%. Operation and maintenance related margins are roughly between 8 to 15%. And project execution, we find it is roughly around 10 to 15%. Next slide, please. The category-wise revenue breakup, again, we have already discussed. Per se, 90% is majorly coming from our gas aggregation business, and that is poised to further enhance because that's the area which is posing a huge opportunity for the company, and it is opening up as well. So that we would be focusing more on that in terms of getting the maximum share from the market, which is coming in front of us as a big opportunity. As on the first half of this year, we have been doing roughly around 92, and the remaining is around 7%. The total revenue that we have undertaken in the last financial year was at 134 crores. In the first half, we were able to do around 69 crores. The numbers which we have declared in our business updates, that numbers I think roughly around 159 crores is what we have done till the 9-month closing in December 31st. So that's the kind of revenue split that we are working on as of now. Next slide. Right. So this is again a graphical representation of the revenues and the PAT that we have just discussed. Overall, the EBITDA margin and the PAT margin, roughly we are maintaining between, the PAT margin is at around 6% and the EBITDA margin is also between 8 to 10% is the levels that we have been maintaining during last couple of years. Next slide, please. The quick snapshot of the profit and loss statement. Again, the bottom line is the net profit maintained at around 6% to 7% in the kind of range. Yeah. The snapshot of the balance sheet. Just we can have a quick view of that. So looking to the key investment rationales for all our esteemed investors, Positron Energy has positioned itself very strongly. We have been present in the entire value chain of natural gas distribution right from 2008, and along with the development in this particular sector, we have been slowly and steadily expanding our business portfolio. So that has always been our strength. The experience the three promoters bring in is invaluable for each of the segment in terms of commercial or financial, as well as the technical aspects of the business. We cover the entire plethora of offerings for our end clients, as well as providing new business development solutions for the existing industries, as well as the city gas distribution operatives. So that has always been our strength. Looking into the kind of service portfolio, we have been providing end-to-end services for the gas distribution segment, as named already, with respect to PMC or might be operations, as well as even execution, where the client has got some kind of requirement. We will always be kind of available for providing those kind of offerings. We in the past have also undertaken very innovative solutions where there have been standard molecules. We have also done gas on wheels, where we have compressed the gas, put it into jumbo cascades, small cascades and all, and distributed it to various industries. So we have been known for creating value for our end consumers, getting them innovative solutions and providing them with all kind of options in terms of whenever they have any such kind of requirements. So that has helped in terms of kind of growing Positron to the level that it has already reached. In order to reach that kind of a level, we have thoroughly been following all the kind of quality standards, getting all the kind of certifications and all that has always been part of it. One of the key aspects in terms of the gas aggregation business is the development of India Gas Exchange, which has been created in the country. We have been the part of IGX, and we have been doing a lot of business alongside them, which helps us giving more flexibility in terms of giving the molecules on a spot basis through various different contracts. And, apart from bilateral, getting into long-term agreements, we also have the flexibility of getting into some fortnightly, weekly, and all kind of contracts for the consumers based on their comfort. So that gives a strategic advantage to us with the development that has happened through the IGX in the country. Looking into the revenue, already we have discussed the profitability margin and all has been discussed. The efficiency ratios, if you look into the ROE levels, whatever we have been maintained in the first half of the FY25 has been at the levels of 7.2%, and ROCE is at around 7.02%. Next slide. Apart from the three promoters, we have a fantastic set of independent directors who are adding a lot of value to our board. So we have Dr. Sapalta as our chairman and independent director. We have Mr. Suresh Ayappankutti as our non-executive director. Have been also providing a lot of guidance and forward-looking path for the company. Next slide, please. Looking into the competitive strength of Positron, we already, as discussed, we have been working on a lot of customization with respect to the needs of our end customers. maybe the industrial consumers for whom we would be working out on various different parameters of gas consumption, finding out innovative solutions of increasing their gas usage, or might be for city gas distribution players in terms of providing all kind of services. So that has always been our strength. We position ourselves as business development solution providers for the entire gas sector. So that has been our positioning right from the beginning. That helps us through the technical services as well as the gas sales portfolio that we are handling. This sector is highly influenced by all the kind of policy changes, the government reforms and all, and that has been on a very positive note in terms of strengthening the sector and creating a gas-based economy, the vision that our government of India has already laid out. And based on that, there has been continual changes in the regulatory framework, the kind of common carrier related changes in terms of unified tariff implementation that has happened, or might be all the kind of pricing regime changes, the allocation changes, the priority sector related changes, and all. So that has all been helping the sector to further expand. And that opens up a lot of opportunity for Positron in terms of further expanding its portfolio and undertaking the growth path that we have laid out by our leadership team as well. Looking into the diverse portfolio because of we being there through the entire value chain, both management as well as technical advisory part of it. And the last leg that is in terms of the gas distribution, we have been throughout and we are inclined in terms of providing all kind of solutions for any kind of new offerings that the customer is required or the client is looking at. So that we always try and make available. Next slide, please. So the key strategies for driving the business for Positron Energy has been through the best-in-class service offerings. We take pride in terms of being associated with more than 90% of the clientele present in this particular sector across the country. We take also immense pride in terms of providing all kind of best services to the highest possible quality standards while we do any kind of consulting service or implementation projects, as well as providing some innovative solution in terms of the gas requirements that the industry or the city gas distribution sector puts in front of us. That helps us in terms of having recurring business with the existing clientele, as well as that facilitates in terms of expanding our portfolio across each of these segments. So that is directly linked with all the kind of growth as well as the expansion of the market reach that Positron has been envisaging through all the kind of regulatory as well as the marketing challenges, whatever comes up. But alongside all our stakeholders, we try and ensure to create the maximum values and expand the service portfolio as well as the gas distribution portfolio for the company. One of the key aspects that will drive the future growth as well as the existing business portfolio for Positron would be in terms of having the best of gas contracts with the prudent gas pricing, with the nature of this particular segment of the industry in terms of the dynamic nature in terms of international as well as domestic scenarios. We have always been prudent in terms of structuring our gas contracts in such a manner that helps us to kind of tap the existing market as well as maintain the prudency amongst all the stakeholders in the sector. Next slide. Thank you so much. I think that gives a clear snapshot about Positron Energy.
Thank you so much, sir. We'll now begin the question and answer session. If anyone has a question, please raise your hand. We'll take the first question from Varun Agarwal.
Hi, thanks for the opportunity. Sujit ji, I
That's
just
what.
wanted to understand the unit economics. As far as I know, I think the product cost is about 85% of our revenue.
When you say product cost, that is with respect to natural gas, I presume, right?
Yes. Yes.
Absolutely, you are right.
And what are the other?
Tentatively, this is kind of going to be a kind of a thumb rule basis. If you look into, yes, 80-85% is the kind of product cost that would be there. Yeah.
What are the other major costs, sir, other than this?
So, see, just to understand the value chain, while you have brought up this interesting question, I am sure this would help for all the investors who are looking into this particular segment. Now, understanding the value chain. Well, we start off, we offtake the gas from the upstream gas supplier. Okay, so once the molecule is taken from there, it is processed. From there, it has to be put into the pipeline. Okay,
Right.
so Positron would be sourcing the contract from the upstream player. Okay, so
Right.
from there, you enter into an agreement with them and you have an allocation that comes up. From there,
Right.
you have to take it to your end consumers or to your end market wherever you want to plug in. So there you have a series of pipeline network crisscrossing, which are being operated by various different players in the country. Okay, so
Yes.
the major cost next level comes is in terms of creating the connectivity, that is through the pipeline related cost. You call it
Right.
as tariffs, pipeline tariffs. So that
Right.
is one of the key aspects of the entire thing. So once you take into the end consumer market, from there you will be able to place it into the industrial unit or might be substantial apart from the product cost comes as the pipeline related cost, right? And that is a variable parameter because that depends from which location to which location you are going to take it, how many pipelines you are going to traverse. So that becomes a significant part of your gas related distribution cost. So it is the
Got
sourcing, the distribution, then obviously there is administrative charges, then you have a lot of financial charges because this is again um, kind of contract driven kind of a business. So when I
right.
say contract driven business, you have upstream contracts, you are also securing yourself with a downstream contract. Now everything is secured by some of the other financial instruments, might be bank guarantees or SBLCs or LC, or might be even cash deposit in certain cases. So it is a
Right.
highly kind of secured value chain, but obviously the financial cost comes in when you are securing it through some bank guarantees and LCs, and also these are the kind of top line kind of cost items which come into the play.
Got it. So when we say gas aggregation,
Yeah.
uh, on the ground, do we have to do something, or this is more like an office-based service?
On the ground, okay, that's a very interesting
Or
question again, Varunji. See, when we talk about gas trading or when we talk about oil trading, it all comes into our mind that is kind of a typical paper trading. So the difference out here is we are not onto any kind of paper trading. We are into an actual physical trading that is happening. The molecule is actually being sourced from one location. It is being transported on a real time to another location.
right.
So one part that we need to understand is India is a vast country. Means from one area to the other area, if you want to transmit a molecule, you have to crisscross through around, as I mentioned, roughly around 30,000 kilometers of pipelines are there. And who are
Right.
the major operators? You have the Gas Authority of India Limited, you have the GSPC, you have PIL, all the big entities who are there. The good part about this entire thing is this is under the Petroleum and Natural Gas Regulatory Board's regime, where it is kind of on a level playing field for all the parties who are involved into this thing. So you have a framework in place.
Right.
Now, understanding that this is the physical movement of the product, you need to be very clear in terms of the nominations, the scheduling, how the molecule is going to come from. Might be we are sourcing from KG Basin in the east, and I have to bring it to say Gujarat. So there are several pipelines which has to come at how you are going to structure it. So there is a lot of complications. So it is not just
Okay.
like paper trading; it is an actual physical trading wherein depth of technicalities have to be there, understood, and that's where our the employee strength in terms of engineers that are on board across the country gives us
Right.
the edge in terms of understanding the end market and creating a value chain how to reach to our target clientele through the most prudent and efficient transmission network. That's the modus.
Right. On our customer side, there are about 10 customers which majorly cater to our majority of revenue.
Mhm.
So, is there a risk of losing any customer and the sales getting impacted?
See, frankly speaking, as I already mentioned, that this entire market is opening up. So there is
Right.
no threat in terms of, we look it as a big opportunity rather. The
Right.
players, existing players in this segment are limited. There can be much more, competitiveness. Like always, I keep on stating, we have to think towards a developed gas-based economy. Like if you are aware about how the European countries and the UK and all they function is in terms of you have in a single household you have multiple options in terms of taking services. Like you had taken reference of telecom sector, where today we can have any kind of operator who can provide you with the connectivity, right? The same would be the scenario in future. We are getting prepared for that kind of a level. When we say there is a vision for 2030, that's the kind of vision, right? Today, the country is having roughly around 200 MMSCMD of volume, the demand. We are targeting to, make it kind of double. So the entire market is also expanding, point number one. Point number two is the infrastructure, as I mentioned about, the city gas distribution networks, which have been licensed already by the regulatory board. It is
Right.
under a minimum work program for the next 10 years. And that progress is, as we speak, also, it's going on, and we are going to witness that development. And what we have witnessed is very clearly the infrastructure leads to the market. So the further expansion of the existing market will also happen. The additional growth that is in terms of the volumes that are also inevitably going to happen. So the pie is huge. The kind of numbers that we are talking about is very small in terms of that. So the 10 consumers is just the thing that we are able to cater at this point in time. We have
Okay.
certain limitations in terms of the volume that we are able to handle with our financial bandwidth,
Right.
or right. So that is what we are being able to undertake. So that doesn't limit us only in terms of those 10, because today, as I mentioned, there are city gas distribution licenses more than 300 entities, across 300 geographical areas, as we call it. So it's
Right.
already available. There are more than 19,000 industries which are already consuming gas, right? Say there would be bulk industries which would be there upwards of 50,000, which may be opened up for the entire segment. So the entire pie is much higher. So
Got
the segment that you are looking at is the thing which is available at present. Okay.
Agreed that the market size is huge, but the
Yeah.
industry growth is in still in the single digits. How will we grow by 25-30%? Are we going to take away market share from others and grow faster?
Absolutely. We see the entire strategy that Positron has been following, is that we have been expanding our business portfolio on a very step-by-step basis. We started this thing when the entire pipeline connectivity was at the most prudent level. We have been there in the gas distribution business since last 15 years. We started in 2008 with ONGC in Jharia. We started with a humble volume of around 200 MMBTU, and we have
Right.
seen the entire growth to the level of around 15,000, 16,000, which is a massive volume. Now, that level has been reached only based on consolidating our positions at each of the levels and prudently operating the entire business network. So what we have been doing is we are not with the faith and belief in terms of just going crazy and the kind of capturing the entire market. The market is huge. They are
Right.
all big players who are there in this particular segment, but the opportunity
Yes.
that is going to come up is also extraordinarily huge. So what we would be targeting is consolidating our position and creating a level in such a way that we have a sustainable portfolio in terms of
Got
the gas molecules. That's the strategy that we are following.
Got it. Got it. I'll come back in the queue, sir. I'll allow others to
Sure.
ask. Thank you,
Sure.
sir.
Thank you.
We'll take the next question from Mr. Rishi Kothari.
Yeah.
Oh, yeah, hi, sir. Thank you so much for the opportunity. I'm somewhat confused in the business model that we run. Just wanted to be clear on it. Firstly, that is, we are into purely a gas distribution business. That is from gas marketing companies and distributing from taking from there and distributing to various industry per se, let's say, or residential areas. That's the business, right?
Sorry, I
No.
missed you in between. Manav, you are able to hear the question, you can respond. I couldn't get in between.
Yeah, hi.
Yeah,
Um,
hi, sir.
no, we are not in the business of supplying gas to residential consumers.
So
We supply gas to domestic. When we say domestic consumer, we primarily mean domestic industry, city gas distribution entities, large and small fertilizer plants, steel sector, ceramic, glass, basically industries and city gas distribution entities, refineries, fertilizer plants, and that's where we supply the molecules. So residential consumers are not our target sector. And distribution to residential consumers is undertaken by city gas distribution entities who have been authorized by Petroleum and Natural Gas Regulatory Board based on various work programs that they have submitted to PNGRB.
Okay, got it, got it. And also, let's say if there are changes in the price of natural gas per se, for example, increase or decrease in the prices, does it affect our margins per se, or how exactly we charge the the whole distribution per se?
Um, uh, See, most of our agreements and our supply to the end users are on back-to-back basis, and if there is any, they are all formula driven. Any increase or decrease in prices are passed on to the consumers. However, notwithstanding, if there are some sudden jerks, like in the case of Ukraine war, and that was a little bit of an unstable time frame, but more often than not, 99.99% times, most of the contracts are pass-through contracts.
Okay, so any percentage, how exact 99? You are saying that 99% of our contracts are passed.
Yes, most of the contracts are pass-through contracts.
Okay, so any fluctuation in gas prices does not affect our distribution margins per se.
And not really. We have a small portfolio. We like to also look at the opportunities of looking at spot market from time to time. So that essentially more of it is from a point of view of increasing the margin, or playing with the swing of the market if there is an uptick. Otherwise, we kind of refrain from any very erratic or opportunistic buying and selling in the market.
Okay, and when we talk about bidding for the contracts per se, we actually bid for the transmission lines, right? I mean, the number of transmission lines that are under our purview, and we probably might bid for more transmission lines to for the distribution per se.
That's right.
So
We
right
do not look at any transmission line. We do not buy and sell or lay transmission pipeline. That's the business of the city gas distribution entities or transmission companies, which are midstream transmission companies like GAIL, PIL, etc. So we are not in the business of laying of transmission lines or getting any kind. There is a GTA that we can get into with each of these entities, and this GTA lists down all the guidelines on the basis of which we are going to buy and sell the molecules. However, as and when we require to close in on any particular supply tranche, we understand the source from where it is being off-taken and the end consumer where it is being given. Based on that, there is a tariff path which is identified, and based on the tariff path, we supply the gas to the molecule to the end consumer. So we do not really have any play in buying or any kind of bidding in contracts. That does not happen. I mean, these are standard contracts which are available in the market. We kind of we are having a gas GTA with various entities, and almost all the entities in the country we have a GTA, and we use them as and when required.
Okay, so in a way, so the contracts are freely available, as in we don't have to go and bid for the contract. You're saying?
There is no bidding per se, but if one has to go and sign up a contract, you need to have some line of sight of molecule from where you're going to buy or from where you're going to source, and some line of sight of end consumer who's going to eventually consume the molecule in his plant. So those are the basic requirements for signing a GTA with the consumers.
Okay, so generally, when you go and go for a this actually not buying per se, but actually using the transmission lines, right? The minimum criteria, what a basic criteria is to see where exactly you source your molecules and where exactly you supply.
Correct.
So end of the day, the customers that are, let's say, the industrial customers that we have, so that's where we go and seek for the contracts, not directly but indirectly. If at all they say agree that we are fine with you distributing us the molecule, so that's where you go for and go for transmission line?
No, that's what I'm trying to say. We understand what consumer needs, and based on their requirements, we draw up a agreement. Once we have signed the agreement, then we supply the gas to the consumer at a given, say, some exit point, or whatever is the exit point, some premise or some delivery point of some industry is identified as an exit point. So we have
So
to supply gas at that exit point. Now we have multiple options. We can source from A, B, C, D, E, whichever location we want to source the molecule. We can source the molecule, and we need to ensure that it reaches the end consumer at his desired exit point.
okay, so in a way, our customers or client per se would be the industry players to whom we're going to distribute that gas molecule for their industrial.
Industry players, city gas distribution entities, fertilizer plants, refineries, glass companies.
Okay, and higher the transmission line access you have, better it is for us to grab the customers as more as possible for us, is it?
Transmission lines, yes. I mean, we have signed up transmission agreement GTAs with almost all the leading players in the country.
And what's that number if there is something that we can unify?
Uh, that's what I'm saying. We have signed up with all the companies who are having transmission. We have signed up with KAIL, we have signed up with the PIL, we have signed up with everybody. I mean, GSPC signed up with anybody wherever. I think there's hardly any um, uh, transmission network which we, as we speak today, are not able to access. We are able to access almost all the transmission networks wherever
Okay,
they are.
okay. So in terms of competitive landscape, if I ask, what would be the competitors in the listed space that we say that it are more or less close competitor, not if at all not apples to apple comparison, but more or less very closely competitors to us?
We are in a very unique space, as I told you. There are not many players who are direct competitors to us. They could be bits and pieces of our business. Some segment, somebody could be a competitor. Another segment, somebody else could be a competitor. On a complete business to business basis, I do not know of any company which is a direct competitor to us. So, you may add on to this.
So here, basically, while we are there in the entire technical services offering, when we talk about consulting services, so you have all the big fours consulting firms doing the same activity that we are also probably offering, where we provide all kind of management consulting. Big four consulting companies are there where we are also participating. If you look into technical services in terms of project management consulting, you have all the big project management companies, the likes of Tractable, Mecon is there. You have all kind of technical services companies who are competing with us in terms of PMC related offerings. Operation and maintenance is again very localized kind of service across the country, where various different kind of players are there, and we are providing a nationwide kind of a solution considering bigger clientele and multiple locations to cater to. So there we face very different kind of competition. And the major business portfolio with respect to the gas distribution stuff, you have all the oil marketing companies who are also there into the gas sourcing kind of a space. So you name any of them, all of them are there. And we kind of, when it is a domestic market related sourcing, we are also there along with them in terms of working on similar kind of space. So that's the way it is. As Mano correctly pointed out, there is no direct similarity in terms of the entire offering, whatever we are providing. There is segment to segment different kind of, competition that we are witnessing.
So the oil marketing companies that you are talking about, see, in a way, they are very players we are looking at, right? So how are we competing with them in this industry? I mean, do we have some sort of moat or something that is actually helping us sustaining the margins in every sort of way? How exactly is it? Because these guys, there would be, huge distribution set up for them, and there's a huge bank, cash bank, and everything. So how these guys are
See,
facing this?
for this, you need to really understand the regulatory framework in the country. The beauty of the vision that the government of India has charted out is under a regulatory reform. So when you look into the upstream part of it, in the upstream you have Director General of Hydrocarbons, right? In
Hmm.
the downstream part you have the Petroleum and Natural Gas Regulatory Board. Director General of Hydrocarbon has laid down all the framework in terms of how the gas molecules would be undertaken through a bidding process, right? Now, when you are going for a bidding, might be a molecule has been taken up for bidding by any upstream player, including Positron, all the other entities, they are also going for the bidding and through a competitive landscape itself, right? Nobody is going to go beyond the existing market economics to take up the volume, right? So there is a equilibrium which is there maintained in terms of prudency based on the market, because all the molecules is ultimately replacing some or the other alternate fuels that we need to very clearly understand. So if at all there is no economics, there is no business sense at all. So what we have seen is, because it is under a framework, when the domestic molecules are there for bidding, there is a certain framework in terms of the pricing also. When it is there in terms of bidding also, the kind of molecules that you will be in the position to take up. So bigger entities have a leverage in terms of getting bigger allocations. That's how I would put it. But when it comes in terms of competitiveness, obviously the share, whatever we would be looking at, and if it is making economic sense, you will certainly be in a position to take up that. So that's the way we have been doing it, and sourcing our gas molecules in the last 2 to 3 years of time.
Okay, interesting. And so in terms of financials, if I say in terms of capex requirements, uh, does this industry per se, does your company require capex, heavy capex sort of way? How exactly do we have a capex pipeline, if at all that is the requirement?
See, this is kind of a OpEx-based model, majorly what is the requirement of fund for us is in terms of getting all the non-fund based kind of limits. Now, why that is required? Because we are kind of providing guarantees to the upstream suppliers in terms of the molecules that we are taking. We are just providing them the guarantees. That is where the capital is required. So when you talk about capex per se, there is no capex involved, because as we have already explained the entire framework in terms of pipeline, there is the arm's length which has been maintained. So the pipeline operators are only doing the pipeline operational activities. City gas distribution entities are only doing gas distribution activities. We are using the existing infrastructure which is available in the country for undertaking this entire business. And that's the beauty of going towards a gas-based economy and kind of open market kind of a scenario. So that is what we are leveraging on.
So it's purely OpEx run business and not capex run business. So in a way, we are
Yeah.
trying to manage our working capital requirements per se in a way on a regular basis through the money that we have. So, but in that sense, if I say right now, ROE, ROC is what around odd of 7 to 8%. So that is very low. I don't know what about the industry per se. That's actually very low. So how are we able to churn that working capital on a regular basis? If at all, that is a minimum of 7 8% is kind of low compared to uh, industry
7 to 8% is for the half year. I think there would be improvisation when we look into the entire the financial year. We expect there would be this thing. Yet the financials are not completed. So once that is finalized, probably we would be in a better position to evaluate. So that's the half year kind of a scenario that we are looking at.
Okay, got it, got it. Done,
Yeah.
done. Thank you so much, sir. I'll join back again. Thank you so much for answering the questions.
Thank you.
Thank you. We'll take the next question from Mr. Vijay Rawat.
Yeah, good evening, sir.
Good evening.
Yeah, coming back to unit economics, can you explain in terms of, dollar terms? Like suppose we are buying in $7 per MBPTU, then approximately at what price we will be selling, and what would be the pipeline network charges per dollar per MBPTU?
Now, this is a very, very subjective kind of a stuff. I understand your question, but there are a lot of variable parameters onto it. There is,
Hmm.
when you talk about gas transportation related cost, it depends in which zone a consumer is. If it is within 300 kilometers, we call it as zone one. The tariff would be different. Zone two, the tariff is different. Zone three, when it is crossing, say, 1,000 kilometers, it is very, very different. And it's substantial
Hmm.
difference. It cannot be, even kind of benchmark. So it hardly makes any. So holistically speaking, just for your understanding, if it's a $10 kind of the thing, the holistic
Hmm.
gross margin will be roughly around 10 to 12%, and you have to work out all your costs within that ambit itself. So that's how we normally do our kind of assessment. Otherwise, it is
Okay.
very case to case specific in terms of where your consumer is, what is the lot of stuff involved. It's highly technical stuff, you
Hmm.
know.
Hmm.
In
Got it.
several
Got it.
cases,
Yeah.
it is in fact the application of the consumer also defines where and how much value we would be in a position to get. So a lot of things are there. What is the alternate fuel that you are replacing? Several things are involved. So that's why it's better that we understand about the gross margin stuff.
Fine. Fine.
Yeah,
And so, what kind of value addition Positron do? Like, why a CGD player will buy from Positron and not from Gale or ONGC?
interesting.
See, we have.
See,
Go on. Sudhir.
yeah, no, you can address. Yeah, tell me.
Uh, as I mentioned in the previous discussion as well,
Hmm.
uh, we have uh, a, a list of suppliers and we have a list of buyers and we have these transmission lines in between. So there are three reasons why any end consumer would buy. So end consumer, be it an industrial, we work along with industries to give them all kinds of flexibilities that they require to run their plant. So our
Hmm.
typical, commentary is that you focus on what you do best. Let us focus on what we do best. So their focus is on producing whatever manufacturing that they are into, and they leave the gas, anything related to gas onto us. So we ensure that whatever gas molecules they require on a day-to-day or a month, week-to-week and a month-to-month basis, that is made available to them at their delivery point or at their meter, at their doorsteps. So,
Hmm.
so that is one thing. What industries typically nobody wants to get into these maze of contract that Sujit was pointing out a while ago. They are maze of contract. There are a lot of technicality involved. There's a lot of molecules changing hands between the pipeline operators, between the source and the pipeline operators, and amongst the pipeline operators, and finally to the end consumer. So it is quite a maze, of agreement that have to be understood, and one needs to also ensure that we, while complying with one set of rules or guidelines, we do not miss into the other set of guidelines, and that's where our forte is. So our team has understands these things very well, and we are able to ensure seamless delivery to our end consumer. So that is so far as one set of consumers are concerned. Plus, industries also, we try and work along with them in understanding their applications. There are many a times we kind of work along with industries to explore new possibilities of using gas in newer applications within their plant. They may be using it, somebody say using it in blast furnace and he wants to use it in lateral heating or something else within the plant. So we kind of work alongside. So that is one area where a lot of these entities engage with us to kind of handhold them to use the gas. A lot of city gas distribution entities have got their own set of challenges. They have their own in-house, domestic consumers, CNG, domestic retail outlets, plus residential and commercials to handle, and they have their own, peak and troughs in terms of gas demand. So they also kind of want molecules at the right time, at the right place, at the most reasonable price. So we kind of ensure that we give them. We kind of also, there are a lot of power sector consumers who want gas, and summers are kicking in. There are times that there is a sudden demand coming up in, uh, you know on a very short notice, and we kind of work along with our various um, operators, pipeline operators, terminal operators, and end users to ensure that our, the molecule is made available to the end consumer at the right time, at the right place, and they are able to produce power or use it for their respective manufacturing activity. So, point I'm trying to make in the whole thing is that we make a compelling offering for the end users to value the association with us,
Okay.
which other entities may not be as nimble-footed as we are.
Hmm. So about this pipeline network, so end to end, this pipeline network is connected to the fertilizer plant also, to the power plant also. Like, how do you ensure, like, if a fertilizer plant needs 500 mbptu per day, then how will you ensure that every day the same amount of gas is reaching the plant?
That's a technical expertise that we have developed over the years, and it's
Hmm.
not really very difficult, frankly, if
But
you
it is
ask me.
entirely transported through pipeline only, right?
Yes, yes, entirely transported through pipeline. As Sujit was pointing out earlier, we have used other mechanisms of transporting the molecule to the end consumers.
Mm-hmm.
But I think that is not really the core business right now. Our core
Hmm.
business is using the pipeline network and supplying it to the end consumers.
Okay, so that was my question. Like, how you ensure, like, if you have to transport the gas to a particular plant, because from the same pipeline, the company which is owning that pipeline, its own gas would be traveling, and then you also are using it. So how do you time it, and how it is done in the like, on ground?
On ground, see, once we are aware as to X amount has to be supplied to some company, we kind
Hmm.
of work with various entities which are en route to the end consumer in order to ensure that he gets the molecules. So there are, say, there is a A terminal from which we have to take the gas. There is a B pipeline entity from where we have to, deliver the gas from the A terminal. Then it has to go to another entity, say a C entity, pipeline
Hmm.
operator. So we have to ensure
Hmm.
that there is a right switching of gas between the two entities, and
Hmm.
the pipeline the end consumer could be on a third network, and then there could be
Hmm.
another
Hmm.
switching
Hmm.
of a molecule amongst the network
Okay.
operators
Okay.
to
Hmm.
ensure that it reaches the end consumer. And end consumer also may be taking gas from maybe two or maybe three suppliers, so there has to be a
Hmm.
priority for him also to ensure that if he's taking X quantity, that X quantity is completely evacuated and our molecule is there. So these are all management activity that we have to operational management and logistics that we have to continuously engage, and our team
Hmm.
uh, works at every step of the way,
Hmm.
works with all the entities in order to ensure that the smooth delivery of molecule takes place to the end consumer.
Fine. 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 Right, sir. So, don't you think the dependency on the other companies' pipeline network is there? So, can it be a risk factor for us
No, no, no,
going
no,
ahead?
no, 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 no. There actually, Sujit has been pointing out. I think I will just repeat for the sake of repetition. He's very nicely articulated. Um,
Hmm.
there is democratization of pipeline network in the country. Government has
Okay.
said that there are so many transmission networks, and these transmission networks have to be accessed by whoever wants to access this transmission network, whoever wants to use the transmission network at a given fee. And that given fee is determined by the government from time to time. And most of these entities, while laying a transmission pipeline, had applied to the transmission the PNGRB and sought their approval. And PNGRB also gave the approval based on which entity is willing to work on the lowest possible tariff that may be
Got it.
applicable at
Hmm.
that point in time. So there's a work program, there's a lowest tariff, and the entity which is operating, and then each of these entities have also kind of there is a roadmap as to how to operate these entities. The minimum work program of sorts, T4 safety standards, operating standards, all have been outlined by regulatory board, and that has to be ensured that each of these operators, pipeline operators, comply with it. So,
Got it.
yeah, that's what it
Okay.
is.
So, my last question is, sir, the contracts which you are entering with the seller and buyer. So, these are done through Indian Gas Exchange, or partly it is through IGE, or how is it?
Yeah, you're right. Partly through IGX, not much, very
Hmm.
little through IGX. A lot of them are bilaterals. A lot of them we reach out to consumers. So
Okay.
IGX also happens, but it's a much smaller part of our kitty.
Okay. Okay, sir. Thank you so much.
We'll take the next question from Mr. Mukesh Panjwani.
Yeah, hi sir. Am I audible?
Yeah, yeah.
Yeah, sir, can you please throw some light on the contract with GSPC? Has the contract concluded? And were we able to fulfill the contracted quantity of 16.6 lakh MMBTU?
Well, Yeah, GSPC contract. I mean, at this point in time, we have to still finalize our books, but broadly, indicatively, we have complied with all the terms and conditions that were laid out in that tender. We continue to work very closely with for supply of molecules to all our consumers. So yes, to answer to your question is that whatever is there in the tender, we have to comply, and we have complied. There is no penalty if you are saying in so many words.
Okay, okay. And sir, now as the contract has ended, are we confident in maintaining our daily volumes of like 15 to 20,000 MMBTU? Because majority of our volumes were going in this particular contract of GSPC.
See, as Sujit has been pointing out right from the beginning, we are trying to, our endeavor over the next 3 years is to take our total portfolio to about 25 to 30,000 MMBTU. 25,000 MMBTU is what we are trying to do. So we will achieve our targets. We are pretty much in line to achieve all our targets. So I can only say that much for the time being. So
Okay. 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 And sir, any major new contract in the pipeline comparable to GSPC?
we will keep you posted. As in, at this point in time, we are not in position to say a lot of things because we are in that time zone wherein we cannot make any public announcements. So we will
Okay.
restrict ourselves from saying anything which will go against. We'll have to follow the market rules. So we'll follow the market rules. So as and when time comes, we will definitely keep our investors posted about any development.
Got it. Got it. And sir, what is the expected impact of current decline in oil and gas prices on our business? Like a positive impact, negative impact, or no impact?
We don't foresee any major impact. See, oil and gas prices are bound to go up and down. I think it is the law of nature. Any product will have its fluctuation. Sometimes it will go up, sometimes it will go down. And our team is trained and experienced to handle any kind of. I mean, this is not really a major fluctuation. It is a fluctuation. I don't deny that, but it is nothing compared to what happened during the Ukraine war. So it's nothing. So part of the game. I think it's very routine. Should not really a cause of concern.
Okay. Okay. And sir, over next 2-3 years, what is the revenue potential of our technical vertical? Like how large can this segment can become?
Sujit, can you elaborate on that?
See, overall, whatever growth projections that we are working on in that segment, we will always try to maintain, kind of the share of technical services to the level that we have already projected. That is one part of it. Now, looking at the kind of opportunity is huge. As we have been already discussing about the potential, there is a huge potential in terms of the city gas distribution business. But as a policy, our company believes in kind of having a sustainability in whatever business that we are undertaking. Currently, our entire focus and thrust is in terms of having the max in terms of the gas aggregation business. So that is what we are undertaking. As you look into the gas portfolio, I see few questions who have been posed up in terms of the volume, the growth that we had put across. Just to give a kind of backdrop, when we were there at the IPO levels, we were kind of at the levels of around 4,000, 5,000 MMBTU per day, right? Just post that, currently, while we are discussing about 15,000 MMBTU, all of us need to appreciate, it has been a phenomenal kind of jump that already we have undertaken. Now we have to create that sustainability. So our entire effort is in terms of maintaining that flow and continuing with the same kind of pace. That's the kind of focus. Wherein technical services already we have certain numbers that we have put in. The potential is there in the market. It is all about the level that we will be in a best prudent position in terms of taking up. So that's what we would like to maintain on that one.
But does this sector have the potential to go like 50 crores per annum kind of potential?
Absolutely.
It has.
50 is a smaller number rather.
Very
I would
small
say
number.
All the four segments that we are talking about, if we look into, it has immense potential all across. Because already I
Mm-hmm.
mentioned CGD per se, today there is more than 300 locations where the work is going on, and where
Mm-hmm.
thousands of crores have been committed by the licensed entities in each of these locations. There's a massive work, and probably we are just taking a very small share out of the entire pie. We feel that there is a much more huge opportunity which is there, but it is all about the priority that the company decides. So our entire
Mm-hmm.
focus has been in terms of giving the growth to the company, which helps the shareholders also witness the kind of growth that we are envisaging, and the company looks into forward towards that. So that is what we have been
Mm-hmm.
trying and maintaining as of now.
Mm-hmm. And so since IPO, we have grown like around 3 to 4 times. And now we are going giving a growth guidance of around 20 to 30%. Isn't it conservative guidance? Because there's a huge tailwind and we are doing very well. In past, we have done amazingly. So,
Mm. See, that's very nicely pointed out by you. Having said that, as I already mentioned, we are looking at creating a sustainability kind of stuff.
Mhm.
It is slightly conservative, no doubt about it,
Mhm.
because when I mentioned during the IPO time, we have stated higher numbers, considering the base was very low. We have already done that. The
Mhm.
application itself is answering all the queries, right? Because we were at 4,000 levels,
Mhm.
we have already reached up to that levels that we were charting out at that point in time for next couple of years. Now, all of us need to
Mhm.
understand the company has ramped up the volume because we lost 6 months during the initial period because
Mhm.
our IPO funds got delayed. That also
Mhm.
needs to be appreciated. So within the shorter span, we tried in terms
Mhm.
of maintaining the targets to the best possible extent, and that's what
Mhm.
our aim and our objective will always continue to be. In terms of maintaining that sustainability. So obviously, yes, there would be a certain kind of the thing, but realistically, we would try to maintain those kind of levels. That's what we are targeting at this point in time.
So that is why I was asking the question that now, as the contract with GSPC is over, would we be able to sustain this 15 to 20,000
Mukesh,
MMBTU in
when
this
we started
capacity?
off, we have
Mm.
been working with several suppliers. GSPC is one example which we recently undertook. So our business of
Mm.
business is to undertake the business, right? We have to continue. It's an ongoing process, right? So
Mm.
the best possible this thing is, yes, the company is already focused in terms of working on several of the things. As and when the update
Mm.
would come in, certainly we would be sharing it. It is not that it is by March everything is over. No, nothing of that sort. So
Mm.
a lot of things
Mm.
continue to happen. There are certain contracts which are ongoing business, certain contracts which would be coming up. And there,
Mm.
as we already mentioned, there are a lot of spot related transactions also which would be undertaken in terms of timely basis, in terms of maintaining that flow. So you just
Mm.
take a cue that we try to meet the targets in the half year by ramping up the volumes at that stage. So that was our focus. August we did it. You looked into the updates. The contract was
Mm.
signed in December. We took a couple of months, but we ensured that the flow has to be maintained. So that's the way we work. We try to
Mm.
maintain the kind of strategy, whatever has been in place, and the numbers. We try to maintain that at the
Mm.
most prudent level on a best endeavor basis. That's how I would put it.
Okay, sir. Okay. And sir, one more thing, what level of working capital is typically required to support a daily volume of 25,000 MMBTU?
Sorry, I didn't understand this
Like
one. What level of?
what kind of working capital is required to like support a daily volume of 25,000 MMBTU? Because we don't know right now. On 30th September, we had cash of around 60 crores, 65 crores, I think.
Right,
And after that, we don't have the balance sheet in our hands. So we don't know because that money was not used. So,
right.
like at the time, people are looking at ROE, which is not correct because you had the cash and you didn't use the cash. And we can only see the
Uh,
earnings.
Mukesh
Yeah.
ji,
Yeah.
again, let me reiterate.
Hmm.
The capital is being used for getting us non-fund based limits. The
Hmm.
money is there in the account as collateral. We are taking guarantees based on that and providing the BGs and SBLCs for securing the volumes that we are taking up.
Hmm.
That is
Hmm.
the intrinsic nature of this business. There is no capital
Hmm.
investment any which way is happening, right? So money
Hmm.
is already
Hmm.
there. The
Hmm.
indicative figures for was maintained by our team is in terms of the half year value, whatever has been undertaken is mentioned there also. So obviously, it is not that the capital is moving out or anything. It has been given as collateral to the banks, and when the final audited reports and all would come in, certainly yes, that would be witnessed as well.
Okay, okay, okay. Okay, sir. That's all from my side, and all the best, sir. Thank
Thank
you.
you, Mukesh. Thank you.
Thank you, sir. We'll take the next question from Mr. Yash Jain.
Am I audible?
Yes. Yes.
Hello, sir. Congratulations on the first 9 month set of numbers. In your prospectus, it is mentioned that 80% of gas was coming from majorly two suppliers. So is that still the case?
Mm, yeah, suppliers, we could have shuffled the suppliers, but yes, broadly.
Okay. So do we have any long-term contracts right now? And if not, are we planning to have these long-term contracts?
The ongoing business. We continue to have keep looking out for good contracts, and we keep working on them. So this is an ongoing activity of the company.
Okay, but we do not have any long-term contracts right now.
We have long-term contracts in our portfolio, which are of the tune of around 4 to 5 years also. But when we look into the kind of holistic numbers, it is a kind of ongoing process in terms of the growth, So it is not that we don't have, we have back-to-back contracts, long-term based, is already available in our portfolio.
Okay. And so another question is, government has capped trader margins. How is this affecting us?
Government has capped trader margin only for a particular type of gas, not for all molecules.
Okay, so can you please explain it a little?
There is high pressure, high temperature gas, HPHT as they call it, for which the government announces ceiling price from time to time. And government is that if there is a ceiling price that the government has announced, the traders should operate only at whatever uh, 16 cent or whatever minuscule margin for those molecules, ceiling price molecules. And government has also outlined that those ceiling price molecules will be available to priority sector, and they have outlined the priority sector starting from domestic, residential, CNG, fertilizer, uh, power, so refinery, power, and then trader. So more often than not, that molecule does not reach the trader.
Okay, sir. And so another is, how do you see the adoption of natural gas going in sectors which are operating in different, like fertilizer sectors or steel sectors, which are using some other method? How do you see the adoption of natural gas in these sectors?
The adoption of natural gas in the sector is going to increase rapidly. I think all of these sectors are very keenly looking at natural gas as their core fuel, preferred fuel, if I may say. And especially in steel sector, you mentioned. So there is very high traction, and may not be relevant right now, but some time back we had undertaken a very big trial for Tata Steel, wherein we had replaced their blast furnace gas, which is virtually free of cost to them, with natural gas. And that trial was hugely successful. And Tata Steel was very pleased with the outcome. And they had announced that into the stock markets at that point in time about the super successful trial. So if we were to take that as a cue, and that was only one blast furnace that they were, looking at, we did the trials on. And that is just the tip of the iceberg. There are so many steel plants across the country which are still using conventional polluting fossil fuels like coal. And there is a world of opportunity there where people are going to migrate to greener fuels like natural gas. We had done a similar work with the Bokaro steel plant long time back, wherein we kind of commingled natural gas with their coke oven gas, and we had supplied to their plant for cold rolling mills, etc. So that was also hugely successful. So answering your question squarely is that there is all the entities across the country are looking at natural gas very seriously, and they are trying to migrate to natural gas. However, these are very large units, and the adoption will be little slow, but it will be there, slow but sure. And we were
Okay, sir.
aggressively participating, working alongside these large entities
So,
to demonstrate the use of natural gas in their various applications.
okay, so do you see any traction coming in from other steel plants for the work you have done for Tata
Oh
Steel?
yes, oh yes, oh yes, lot of traction.
Okay, okay, thank you, sir. Sir, just one last question. So you gave a guidance of 70% CAGR growth for the next 2 years. So are we going to fulfill that?
With the grace of God, yes, we should.
So that
We
means
are,
we're going to do a revenue of around 230 crores this year.
I see, as I just mentioned a while ago, I mean, we are in that period wherein we should not and cannot go and make any announcements. Plus, we have not completed our balance sheet auditing, etc. is still awaited. But indicatively, we are doing okay. We will deliver what we have committed.
Okay, sir. Thank you. That's it from my side. Congratulations.
Hi, Finn Bodal this side. Due to time constraints, we'll have to conclude this call. You can share your questions with our IR ID and we'll be happy to respond. Thank you everyone for
Thank
participating.
you.